Today's presentation is going to be Floor Trader's Secret, Confessions of a Professional Options Trader. I will be your presenter today. My name is Andrew Keene. Past performance is not indicative of future results. So a little history about myself. I was a floor trader at the Chicago Board Options Exchange for about a decade. I traded in the General Electric pit, then I traded in Philip Morris, then I moved into the Apple pit. I was one of the largest independent Apple traders in the world. For about 4 years, I was personally backed by the CEO of the CBOE. His name is Ed Tilley. I remained really good friends with him. And I was a market maker in about 125 different classes. Active trader in futures, Forex, stocks, and options. But to be completely honest, my bread and butter is trading equity options, unusual option activity in the option market. So we're going to talk about institutional order flow, what it is, a proprietary-based trading plan that I'm going to teach you today, and how you should use it in your trading. Regular contributor on CNBC, Bloomberg, Fox Business, Sky Australia, WCIU. I have a meeting with CNBC tomorrow. I'll hopefully get my own show on CNBC Primetime, which unfortunately I won't be able to do as many webinars as I have done in the past because I've done about 500 live webinars. So a little history about myself. We're going to go to the disclaimer here because we have to put this in every single webinar I do. Day trading, short-term trading, option trading, and futures trading are extremely risky undertaking. They are generally not appropriate for anybody with little capital, low or little tolerance of risk, and a low tolerance of risk. Never execute a trade unless you're willing and prepared to lose your entire investment. I am not a registered investment advisor. I cannot give recommendations or advice. What I can offer you is my opinion, and in my opinion is more valuable than a recommendation or advice. So I cannot offer you guys basically recommendations, but I can give you my opinion. I trade 100% with my own capital every single day. So if I lose money in a day, like I'm losing money today, that is all my money. If I make money in a day, that is all my money. So I can just talk about trading, but I can't give you guys individual recommendations of what you should do with your own money. So we're going to talk about institutional order flow in the option market. And what I'm going to teach you guys is what paper is. And paper is an order from a hedge fund, mutual fund, retail bank, or big trader. Okay. So paper just refers to an order from somebody. And basically the way, let me get my Camtasia going here. And the way that they used to say it, so let me bring this up. Once I get my Camtasia, then I can go back to the whole presentation. Okay, so very good. So paper is an order from a hedge fund, mutual fund, retail bank, or big trader. Basically, let's move this down here, and I think I can record it while I do my presentation, hopefully. From current slide. Okay, cool. So an order from a hedge fund, mutual fund, retail bank, or big trader. So what happened is the brokers on the trading floor, because I traded down there for 10 years, used to come into the pit with an order, okay? The order was on a piece of paper. And the traders used to say, what's a trade, what's a trade, what's a trade? And they just changed it to what is that piece of paper? What does the paper say? So paper stands for an order from an institution, hedge fund, retail bank, or a big trader, okay? Who trades this? We are talking about mutual funds, sovereign wealth funds, pension funds, the biggest and brightest traders in the world allocating capital on options. We all know stocks are born and dead. They move 1%, 2%, 5% in a day at most. Options can get you returns of 100%, 200%. I'll show you an example today in that a lot of my subscribers got into in CTRP, where you got 600% return in about 3 hours. Okay, options are a derivative of stock, which means higher risk and higher reward. Why is paper important? Because if I knew, hypothetically speaking, a stock was going to go from $30 to $50, I would not be trading stock. Why? Because that's only going to give me a 67% return, 20 into 30. If I would rather trade the option market, because the option market is going to give me a better ROI, return on investment. So the types of trades I watch, everybody makes trading so confusing and so complex. Trading shouldn't be that confusing and that complex. There are only two types of options out there. There are calls and there are puts. An institution can either buy calls or they can sell calls. Hold on. So an institution can either buy calls or they can sell calls. They can either buy puts or they can sell puts. Institutions will only buy calls for one of two reasons: speculation of the upside or a hedge against a short stock position. So when I'm watching institutional order flow in the option market, I have to figure out if an institution is buying calls of speculation or a hedge against a short stock position. If an institution sells calls, are they selling calls against an existing long stock position, which is known as a cover call and an extra dividend stream, or are they selling calls to establish a short stock position? Institution buys puts. Are they buying puts as speculation to the downside, or they're buying puts against a long stock position? The synthetic of a long call is long stock plus long puts. So hypothetically speaking, if I knew a stock was going to go from 30 to 50, as an institution, they're better off buying puts and buying stock than buying calls, because the OCC and the SEC will go after them if they buy calls. Last one, trader sells puts. Are they selling puts against a short stock position, which most of the time they're not, or are they selling puts to establish a long stock position? Does reading paper work 100% of the time? The answer is no, it does not. There's no holy grail system in trading, but I've been trading this system for 15 years, and I've made millions of dollars trading this system, trading unusual option activity or institutional order flow in the option market. So out of those four things, if an institution buys calls, and I've never back tested any of these strategies, 60% of the time they buy calls is bullish. 40% of the time they're actually buying calls against a short stock position. I've had positions in the last couple of days in Bristol Myers and Myelin where I'm getting crushed on it. I never know a trader stock position on against their option position. If an institution sells calls, I would say this is 50-50 bullish. 50% of the time they're selling calls to establish a short stock position. 50% of the time they're selling calls against a long stock position. Institution buys puts. Are they buying puts against a long stock position, or are they buying puts as speculation to the downside? And if an institution sells puts, are they selling puts to establish a long stock position, which most of the time they are, or are they selling puts against a short stock position, which most of the time they are not? If you looked at all four of these right here, you would see they're all bullish trades. And the only reason they're all bullish trades is because the stock market is the biggest Ponzi scheme in the world. Reason for that, 401ks, mutual funds, pension funds, sovereign wealth funds are all buying the stock market. If there's more buyers and sellers than anything in this world, then it goes higher. It's a supply demand curve. So does trading paper work 100% of the time? The answer is no. It's a game, it's a mystery. But if you trade stocks, you trade futures, you trade Forex, you're trading against a computer. You're never going to win. It's very similar to playing the computer in chess. If you play an expert level, the computer in chess, you have a 0% chance of winning. This is a mathematical equation you should do 100% of the time. So these are the whales, okay? Institutions, they are mutual funds, pension funds, sovereign wealth funds, okay? I'm just a small trader underneath it. The trades that I'm watching throughout the course of the day, bets being allocated on derivatives or options, anywhere from $50,000 to $5 million. There was a trade today in American Airlines. The institution bought weekly 43.5 calls for 34 cents. Within 2 hours, those went up 300% return. Institution bought about 7,000 of those, about a $200,000 bet. Nice to meet you. $200,000 bet, and that went from 200,000 to about 600,000 within the course of last hours. So by being able to see what the whales are doing, by following smarter organizations or traders, makes a better chance of trading. Institutions have access to information technology that we do not have as a small retail trader. So as a small retail trader, I don't have this access, okay? So simple and easy, they are trading on insider information. You guys ever watch a show called Billions? It's gotten really popular, it's on Showtime. Talks about trading on insider information, okay? So we should be following to see what the smarter traders are doing and mimic their positions. I just want to see what the smarter traders are doing, and I want to do the same thing as them. Hedge funds. Hedge funds are known as the sharks. Those are the killer sharks in there. The sharks, and I'm just swimming under them. So these are Alpha Shark Elite traders under them. The reason most of you traders are losing money is because you're coming up with all your trades yourself. I am not coming up with my trades myself. I'm watching institutions allocate capital and money on trades. I am mimicking or basically copycatting their position. Why would I come up with a trade myself? Okay, I am not a CMT, I'm a chartered market technician. I do not know, I'm not a fundamental analyst. I don't know where a stock should go. So by being able to see what the whales are doing and sharks are doing, makes me have a better chance of winning money on my trade. So I am just watching institutional order flow, and I'm watching the biggest and best traders in the world place money and allocate capital on options, or otherwise known as derivatives. So you say to yourself, what is the order process? Okay, what is the order process? Sorry, one second. Okay, so the order process is the institution will come up with a trade based on research, information, and analysis. When they come up a trade, they will then call their broker and they will say, hey, this person somewhere in the world wants to take this trade. Do you, as the bank, want to take the other side of the trade? So they will then shop the order to Citadel, Barclays, Goldman, and they will decide if they want to place a trade on that. If the initiator, and that's all I really care about the initiator is doing, okay, so if the initiator is buying calls, an institution will sell calls, and the institution's hedge against selling calls is buying stock. Then the trading will go to the trading floor. We'll go to the trading floor, and the trade will be executed on the trading floor. Once the trade is executed on the trading floor, then it will be recorded and documented for the OCC and the SCC. So there are no dark pools in the option market. Okay, there are no dark pools in the option market. Dark pool is actually used as a benefit against insider trade, algorithmic trading, but there's no dark pools in the option market. Then the trade is executed on the trading floor, and I am able to see the trade. Okay, I will show you my scanner. You do not need the scanner. It shows me every single trade across every exchange. I think I have it up here. Okay, so this shows me every single trade across every exchange. There's 800 to 1,200 trades, and I'm going to teach you guys my proprietary-based trading plan on how I know if a trade is potentially a good trade or not. But that is the order process of that. It's not really that important, but let's see what an order looks like. This is a trade in CIEN, okay? I made over $8,000 profit on this trade in 3 hours, and I'll show you my P&L, and this was a trade about a week and a half ago. So let's break down this process for you. I'll give you guys my proprietary-based trading plan. So institutional order flow in the option market, a trader somewhere in the world, no idea, could be a grandma in Ohio, I don't know, bought 2,500 CIEN, May 25th, that is expiration, 26 calls for 63 cents. So they bought 2,500 CIEN, May 25th, 26 calls for 63 cents. So someone said, I want the right, but not obligation, to buy 250,000 shares of CIN between now and March 25th for $26, and I'm willing to pay 63 cents for this right. 2,500 times 63 cents, about $150,000 bet. Okay, this is not me putting on the trade, but this is somewhere in the world putting on a $150,000 bet. Within 3 hours, this trader, if they did not have a stock position, was up $150,000 profit. Okay, these calls went to roughly $1.30. So this trade went from $150,000 bet to being worth $300,000 in hours. I will show you what I did with this trade. I took the exact same trade, and you can see my P&L right here. Okay, this is timestamped and dated with Thinkorswim. I trade on Thinkorswim. Okay, April 26th. What's today's date? May 7th, about 2 weeks ago. And you can see my profitability. I bought the exact same calls as the institution. I said somewhere in the world, someone's being really smart and buying a huge order of CIEN calls. I know as a smart trader, I can set up a reward to risk setup and take the same trade. So I bought the CIEN May 25th, 26 calls for 60 cents. As you can see here, and I highlighted this, I made $8,400 in 3 hours, okay? If you guys ever made $8,400 in 3 hours, good for you. It doesn't happen very often, doesn't happen every day. I lose money sometimes, but that day was a great day and a great trade as I saw CIEN calls being bought. I jumped on the bandwagon. I said, this trader knows something. I went through my proprietary based Oak Ribbit trading plan, and you can see here, $8,400 profit here in 3 hours. So I'm going to teach you guys my secret sauce or secret recipe. My grandmother used to make my grandfather a pie from scratch every night from dinner. This is true, it's a fact, okay? So she used to make a pie every night for dinner. She'd say, hey, what's in it? There's some sugar, there's some butter, there's some flowers, and she would never tell him exactly how much. She had all these index cards of recipes. Oh, come here, come here. She had all these recipes of things, but she had these all memorized. When I trade, I don't go look at sheets because I have all my trading memorized. I know my exit strategies, I know my entries, I know when I'm gonna get in and I'm gonna know when I get out. But I'm here to teach and educate you guys how I use institutional order flow, and I've made close to $5 million in my trading career trading institutional order flow in the option market, okay? This is my proprietary base plan. There's a really good book called Outliers with Malcolm Gladwell. It says it takes 10,000 hours to become an expert. 10,000 hours to be an expert. So if you guys trade for 4 hours a day, and there's 262 trading days in a year, that means it's 1,000 hours a year. So you need to trade for 10 years to become an expert, okay? So what I'm teaching you guys is how I became a full-time trader, okay? And I'm gonna teach you this trading plan right now. It is called the Oak Ribbit Trading Plan. OCRBTT. Oak Ribbit Trading Plan. Okay? So the first thing I look at here is the option volume versus open interest. Okay? Option volume versus open interest. I always want to make sure my volume is greater than open interest. And what is open interest and what is volume? Volume is how many options trade today. Open interest is how many options exist before today. Okay? So volume, I always want to be greater than open interest. And I repeat, volume is how many options trade today. If I was you guys, which I'm not, I would be taking a screenshot of this or taking a picture of this. Okay? So how many options exist before today? Volume is how many trade today. Okay, so how many trade today? How many exist before today? Chart. If a chart is bullish, I only want to be looking for bullish setups. Maybe an institution's buying calls on a 52-week low. I personally think if they're buying calls on a 52-week low, they're buying calls against a short stock position. If puts are bought on a 52-week high, I think if they're buying puts against a long stock position. So you got to always line up the chart with the trade. Okay, you always got to line up the chart with the trade. R&R, some people like rest and relaxation. I do not. I like a risk versus reward setup. Okay, and this is something we're going to dig deeper in the master course. We're going to teach you guys how you can have a confident scale, so you know how much you're really willing to risk on any trade versus how much you want to make. Paul Tudor Jones, probably the best trader in the world, he always looked for stuff as a 3-to-1 reward to risk setup. So he wanted 3-to-1 reward to risk setup. This is so important when you're trading R&R. Some people like rest and relaxation. I do not. I want my risk versus reward setup. Okay, putting in stop losses, maybe that's what you want to do. Okay, then we have break even. okay? Break even on expiration. Then we have TNT, time and target. And time and target's really tricky because you're going to want to look at your time and target based on standard deviation ATRs and ATRs, okay? So there's two things in trading. There's a standard deviation ATR and there's an ATR. ATR is how much a stock will move from high to low 33% of all days. Then we have the standard deviation ATR, which is how much it will move from high to low 67% of the days. This is something, guys, I'm going to teach you in the master course, how you can better your exits by using both of these numbers. Average true range, how much it moves from high to low on average 33% of the days, and then your standard deviation ATR, how much it moves from high to low 2/3 of the day. And you're going to want to implement this in all of your trading for exits. On unusual option activity, doesn't really matter if it's on unusual option activity. Then TNT, time and target. How much time you want to give a trade, and what are your targets on that trade, okay? And this is something we're going to go in a little bit deeper in the master course. Unfortunately, I don't have time to go over everything today. I wish I did, but I don't. Okay, so the first thing I look at, okay, and this is the Oak Ribbit trading plan, is the option volume versus open interest. Volume is how many options exist before today. Open interest is volume is how many trades today. Open interest is how many options exist before today. So I always want to make sure the volume is greater than open interest. So I want to take something where how many trade today is greater than open interest. And you can find this on Thinkorswim. I trade through Thinkorswim. So let me just bring this up here on Thinkorswim. I'm going to have to show you guys real quick. Okay, so on Thinkorswim, you can go in here and let's say AAL, because they traded a lot of AAL today. Okay, and then you just go here and you can go to customize and you want to put in, so I already have it in, but I'll show you. You're going to want to go to volume, bring up volume. So volume, add, and then open interest, you add. Hit OK. So they bought a ton of AAL calls. These went up 300%. So if you knew the Oak Ribbit trading plan, today you could have made potentially 300% on these. So volume is right here, and then open interest is next to it. So they bought 13,196, AAL 43.5 calls, and the open interest was 450. So before today, there's only 450. Today, 13,000 of these traded. So this is volume versus open interest, and that's very important. You can get that on Thinkorswim, TradeStation, and any other platform. Then I want to make sure the chart lines up. I want to look at good reward to risk setups on chart. I personally use Ichimoku Kinkin Hoi. You can use anything you want for your trading. Okay, I use Ichimoku Kinkin Hoi, but you can use anything you want for your trading. Okay, so I'm always looking for Ichimoku Kinkin Hoi, otherwise known as the Ichimoku Cloud. Then you want to make sure the chart lines up. Okay, let's talk about that. Higher highs, higher lows is one way. Then R&R, risk and reward setup. Okay, how much are you willing to risk on a trade? And this is something, guys, we dive a lot deeper into in the master course. It's something that we don't have time to go in here, but I will teach you guys a confidence scale, how you can never blow out of your account by putting a trade as a dollar amount or percentage of your total book. So what is your dollar amount or percentage of your total book on these trades? Then reward, how much you want to potentially make on these trades. Okay, this is very, very important when you're trading. Look at your R&R setup, your risk and reward on this. Okay, so I'm going to teach you the confidence scale in the master course. We have 15 proprietary based courses. This is the #1 selling course we have. Okay, break even on expiration is always easy for options. Strike price plus the price of the calls, and then strike price minus price of the calls. Put price minus the price that you pay for it. So it's very, very easy to get your setups here when you're looking at this, knowing your break even. Break even is the least important of the trading plan. So the break even is the least important of the trading plan, but it is important here. Okay, so this is everything I'm looking at here. Then time and target, and I'm going to teach you guys in the master course proprietary based targets. Okay, how you can use that standard deviation ATR to get better profit targets. Everybody should be using your ATR and your standard deviation ATR. Every option works differently, okay? If you're trading weekly options, you're going to want to use the standard deviation ATR. If you're trading monthly options, you're going to want to use the ATR. Then target. So here's a couple examples of trades that have hit the tape. There was a trade today in American Airlines, AAL, that if you got in the trade, you could potentially have made 300% profit in 3 hours. So let's go down and look at these trades. Institutional order flow in the option market. A trader bought 2,880 DKS DICS, March 32 calls for 75 cents. Okay. Within a couple of days, these calls went up to $4. So if you're a smart trader, you took a picture of that oak ribbon trading plan. You say, is the option volume greater than open interest? The answer was yes. Then you would say, hey, how does the chart look? Well, it's breaking the cloud to the upside, and we also see it very strong bull bar. Well, let's put on a trade. Let's put on a reward to risk setup. So you could have bought these, could have used a 50% stop loss. Okay, 50% stop loss, you would have risked to 35 cents. So you're risking 40 cents on this trade. Okay, these calls went from 75 cents to $4. So you would have risked on a 10 lot $400. That $400 would have turned into $4,000. 600% returns, and actually would have been 1,200% return on your risk. Next example, a trader bought 3,754 BABA. Some people call it Alibaba. Alibaba, March 200 calls for 25 cents. Okay, so someone bought these for 25 cents. These went to $2. 800% gain here in Alibaba in 2 days. Volume greater than open interest, yes. Chart bullish, breaking the cloud to the upside. Risk and reward, could have risked 25 cents. These had high gamma, high theta, high risk, high reward. And you could have sold these the next day, 2 days later, for $2. Okay, you cannot get these kind of returns unless you're trading anything but penny stocks, and I do not trade penny stocks. Trader buys Citigroup, March 74.5 puts for 29 cents. Okay, volume greater than open interest, yes. Chart breaking the cloud to the downside. So unusual option activity and institutional order flow in the option market doesn't work well just for calls. It works well for puts as well. Okay, so we see here on this trade, broke the cloud to the downside. These Citi puts went from 29 cents to $1.50. The stock moved from 76.5 to 73.5. So stock sold off. Yes, it did. It sold off $3, 5%. Well, how much did the option move? The option moved and went to $1.50, which is a 500% return. Okay, so institutional order flow in the option market strikes again. How does a trader know to buy puts? We'll never know. But this is why I trade this, and I continue to be trading this, and I will continue to trade it forever until there's dark pools. And there's currently no dark pools in the option market. So I can see all these trades that hit the tape. U.S. Steel, and this chart was a little bit more difficult. U.S. Steel, trader bought X, March 39 puts for 22 cents. Okay, consolidation, big tails on top, means sellers came into the market. Just 8 days later, these puts went to $1.50. Okay, 22 cents to $1.50. Let's say you bought 20 of these. Okay, you bought 20 of these for 22 cents. That's $440 of risk. If you held these for 8 days, okay, these would have turned into $3,000. Okay, on $440 of risk. Imagine what you would do with an extra $3,000 in your pocket. That's a lot of money for anybody. Okay, so what would you do with an extra $3,000 in your pocket? That's so important, guys. Okay, setting up reward to risk setups, though. You're not just randomly buying options. You're buying what the biggest and best traders in the world are doing. Institutional order flow in the option market. Not taking trades just to take trades. You guys all sit there, you analyze stocks and charts, and you base trades on what you think. You should not be basing trades on what you think. You should be basing your trades on what the institution thinks, because they're smarter than you. They have information and they have access to information that nobody else has. And this is why I've been trading this system for 15 years, and I continue to trade this system and teach it to everybody. Over the course of the last 5 years, we've sold over 10,000 educational courses. This is the #1 selling course. Why? Because it continues to make me profit. And it's possible to not make profit in a day, in a week, even in a year. But trading against the computer, trading futures, trading stocks, trading Forex is really hard. You would never beat the computer in chess. They're too good. But trading institutional order flow, it is possible to win in trading. 90% of everybody that trades loses money. There's a reason for that. Because you're trading against computers. You're a manual trader. This is why you have to trade something differently, trade something new that you've never seen before. Okay? So you say to yourself, okay, this sounds great so far. Why should I take these trades? You should take these trades because the hedge funds and big traders have more information than we do as regular traders. That is why they're consistently getting in trouble for insider information. Trade with the pros. Some of these trades are Carl Icahn's option trades. Some are David Einhorn's. Some are Leon Cooperman's. Okay? We don't know which ones are theirs. We don't know their stock position. But these are trades from the biggest, best hedge funds in the world. And all trades are public information. Once a trade is executed on the trading floor, it becomes a public order. When it's on the trading floor, before that, it is not. So even if the institution is trading with insider information, we cannot get in trouble because we're just trading on a public order. Here's the last example. This is CTRP. Institutional buyer bought CTRP, March 49 calls for 20 cents. That day, those calls went from 20 cents to $1.20. 20 cents to $1.20 that day. Okay, that was the day they reported earnings. Someone in the world said, hey, I'm going to buy some CTRP calls. How did they know the stock was going to just rip to the upside? And 2 days later, the option would be worth $1.20. Why would I buy a stock if I can buy an option? Buying a derivative, you're going to get a better ROI, return on investment. And this is why institutions will continue to trade this way. So, summary and key takeaways. Reading paper does have its limitations, and this is not a holy grail system, guys. Okay? If I was going to say there's a holy grail system that's going to make you money every single day, I would say run for the hills. Call buying is not always bullish. Put buying is not always bearish. Bluffing, bulls can't bluff selling puts. Large paper and unusual volume will help put probability in math in your corner. Okay? I think Dean was just on, he was talking about probability in math. Everything in trading is probability in math. Reward to risk setup. Okay? There's a reason in Vegas when you play craps that the house has 7. Why does the house have 7 when you're playing craps? Because 7 will show up more than any number out there. Simple and easy. So that's why the dealer takes it. Because they know in the long run, they're going to make money. In the short term, yes, they could lose money. Someone could hit them in craps for a lot of money. But in the long run, they know they're going to make money. Use that proprietary based trading plan that I taught you today. OCRRBTT. I mean, that trading plan took me basically like 10 years to put together for you guys. No trading plan or trading system is without losses. I'm not a registered investment advisor. I cannot give recommendations or advice. If someone tells you a system where it's a holy grail system and they always make money, I would say run for the hills. I'm watching my P&L. I'm down money today. I'm losing money today using this system. But I know over time, I think, and I'm not positive, I've lost money twice in the last 15 years. And I've made millions of dollars trading institutional order flow. That's what I used on the trading floor, and that's what I will continue to use. Okay, so I don't like to say 5 over because I don't know the exact number, but I have all my statements from Goldman Sachs. Close to $5.5 million in my trading career, trading institutional order flow. This is all I trade on the trading floor. In theory, we're supposed to be a market maker where I just take advantage of implied volatility and buy cheap volatility and sell more expensive volatility, but that's not really how it works. How it works is you watch institutions place bets on certain trades and you mimic their positions. I've made almost $1 million trading Apple, not 1 year, but 2 years trading the system. I have traded over 1 million equity options and about 40 million shares of stock. So I'm a pretty large trader. I'm not as large as institutions. Compared to a hedge fund, I'm a nobody. But, you know, I do trade a lot. You know, today I haven't traded that much. I've traded, let's see how many options I've traded today. Traded 121 options today. So today I really haven't traded that much. Stop guessing and start making money with an active trader who still trades every single day. What you're going to learn in the master course, you're going to learn the Oak Ribbit trading plan in much more depth, volume versus open interest, how to dissect the whole option chain, why I mimic these hedge funds. We're going to talk about how you can set up one trade for many different strategies. Maybe you don't like to buy calls outright, but there's too much implied volatility or time decay. You could, in theory, turn those into selling credit put spreads. I have someone that does that all the time. You could, in theory, turn that into buying call spreads or condors. How I use stock volume versus option volume. Figuring out an exit strategy and using the no blowout trading plan. How to determine which trades I want to allocate the most capital on. This is everything you're going to learn in the course. And we have a special offer for you guys today. And then I will go to the questions. Okay, so what you guys will get for $97, and if you sign up today and today only, I'm going to throw in 4 bonuses for you. Bonus number 1, I'm going to give you a free Thinkorswim tool that shows the high and low of the day. Okay, it's called the high-low bar, and it's plotted on your graph. We sell that for $299 alone. Okay. Second bonus I'm going to give you is my cheat sheet. This is a cheat sheet of every trade I've made money on this year and I've lost money on this year. So that is a $199 value. I hate writing on this thing. It's so hard. Okay. Also, we're going to give you a tips and tricks. Tips and tricks will be after the course. Okay. That we sell for $199 too. Plus, I'm going to give you one more bonus, and that's I'm going to tell you who are the best people off Twitter where you can get all this information live. Okay. And let me go to the questions box. So I'm adding in 3 bonuses today. Okay. If you guys have any questions, please feel free to ask questions here. It's options on the floor /option. Okay. Can I show you losers? I don't have time, but they're definitely losers. If you guys have any questions, feel free to ask any questions here. Dark pool is something that they trade off the floor. SPX it doesn't work on. Okay. So make sure you guys sign up. It's optionsonthefloor.com /option. Yes, we'll show you how to scan on Thinkorswim. A dark pool was created to fight against the high frequency trading, but there's no dark pools in the option market. So every trade that is executed on the trading floor, I will see that order. Every trade that is traded on the trading floor, I will see that order. Okay. Here's the link, guys. I see people signing up. George is in. Barbara is in. Deborah is in. Plus, we're throwing in 4 bonuses, guys. These bonuses are an $1,800 value total. So bonus 1, we're going to even do a Thinkorswim scan. Okay. That is a $299 value. Okay. Bonus number 2, we're going to give you a cheat sheet. God, this thing does not write well. Cheat sheet. That is a $199 value. That shows you every single trade I've taken this year, all the winners and all the losers. Bonus number 3, we're going to give you a tips and tricks. We sell that for $199. Okay. Bonus 4, I'm going to give you a list of the top people to follow on Twitter that will give you this order flow in real time. So you don't need a scanner. You don't need anything. All you need is to follow the right people on Twitter because Twitter is real time. Plus, you guys are going to get the course as well. This course is live and on demand. I personally teach this course about once a month. This is our #1 selling course. This course is live and on demand. That's a $999 value on the course. You go to our website, alphashark.com /products. You'll see it on our website for $1,000. So we're offering you all this for $97, guys. That is it. It's an $1,800 value. I usually try to give people 10 times their return. This thing is actually going to give you 95% off. Okay, so 95% off here. You will get this, the course, live and on demand. The Thinkorswim tool, that's a high-low tool, $299. You'll also get the cheat sheet. That is a $499 value. Plus tips and tricks. It's a $199 value. Plus, I'll give you a list of the best people to follow on Twitter, and that is a $99 value. So total value here, guys, is $1,800. We're offering it to you guys for only $97. I'll put the link in here. Let me go to my inbox. Steven is in. George is in. Chris C is in. I'm looking at my inbox right now, guys. We have 25 spots available, and then after that, we will sell out. So you guys are going to get those bonuses, $1,800 value total. Can this help with Forex? No. Unusual option activity works for day trading stocks, swing trading stocks, day trading options, or swing trading options. Megan is in. Howell is in. We have about 16 more spots, guys, so make sure you sign up. Does anybody have any further questions? I have about a minute left here. If you're trading Forex, this does not work. If you're trading futures, this does not work. Okay? This trades for day trading stocks, day trading options, swing trading stocks, or swing trading options. So you're going to get the master course. You're going to get the master course live and on demand. Okay? You're also going to get the Thinkorswim tool. You're also going to get the cheat sheet. You're also going to get 2 more bonuses, all for $97. So make sure you guys sign up. We only have 25 spots to start, and I see my inbox blowing up here. It's optionsonthefloor.com/option. Everybody have a great, great day. Thank you.